The Federal Reserve Chair Jerome Powell has just given a massive warning to Cardano and crypto holders. Well, it appears to be very scary, and things can get worse from here. So stay tuned and don't miss out on anything, because this is something every holder needs to see. Hey guys, and welcome back to Cardano Rumors, the best place for your daily dose of Cardano. Before we proceed, I want you to hit the subscribe button and smash the notification bell for more interesting updates about Cardano, and if you have any questions, be sure to leave it in the comment section. Also, you stand a chance to win a brand new MacBook Air. Here's what you need to do. It's very simple and easy. The gold coins will be randomly hidden during this video, and all you have to do is keep in mind those special and misleading moments. Then go ahead to like the video and comment on the number of coins you found in the comment section. Now, ready for today's big revelation? Because we are. We know that the U.S. Federal Reserve lifted the federal funds rate for the first time since 2018 on March 16. But the worst thing is that the central bank anticipates 6 additional rate hikes this year. This is because inflation has accelerated significantly in the United States in a short period of time, as the February Consumer Price Index report from the U.S. Labor Department stated that inflation had increased at the quickest rate since 1982. Now, before I move forward with this news, let's first establish why this rising inflation and rate hikes from the Fed are important for Cardano and other cryptos. So first of all, we know that inflation is rising in the U.S. and some other countries. And this is happening because the global economic situation has been affected by a number of factors, including the ongoing war in Ukraine. Moreover, several reports have confirmed that the U.S. Federal Reserve has been increasing its balance sheet by printing more and more money. This is exactly why inflation is rising. But the good thing is that this rising inflation is actually good for cryptos like Cardano. This is because, during times like this, investors come to cryptos markets as cryptos are typically considered a hedge against inflation. However, it appears that the Fed doesn't like this fact since it is threatening traditional markets. The Fed has been planning to counter this rising inflation by interest rate hikes. And this is exactly why the Fed had already hiked rates for the first time in 4 years. When Jerome Powell announced this rate hike, it was expected that Cardano and other cryptos would see a massive sell-off. This is because rate hikes usually control rising inflation. However, this doesn't happen as this rate hike wasn't able to control the soaring inflation. As a result, we cryptos rallying during the last couple of weeks. And this is why we saw just recently that Cardano hit the $1 price level after a long time. So things are currently looking good for Cardano. But it appears that the Fed Chair Jerome Powell wants to be more hawkish on his economic policies. He said recently that the central bank would be forceful in restoring price stability. He said that the labor market is really strong and inflation is significantly higher than it should be. But in order to rein in inflation, the federal funds rate could be hiked above the usual 25 basis points. He further added that the central bank would take all necessary measures to restore pricing stability. Specifically, if the bank determines that it is appropriate to act more aggressively by raising the federal funds rate, it will do so. Now, seeing these recent comments from Jerome Powell, market analysts are warning that Cardano and crypto's resiliency may be put to the test if the Fed continues to be hawkish until inflation is contained. Looking ahead, the Fed's hawkish posture may depress prices of cryptos like Cardano, just as it is expected to depress equity markets. Meanwhile, the Fed officials have recently forecasted the rate to reach 2.75% in 2022 and 2023, indicating that they are willing to raise the rate above what they consider to be neutral in order to rein in inflation next year. And seeing this, James Bianco, president and macro strategist at Bianco Research, believes that if this prognosis comes true, they are going to put pressure on the markets and they are going to want people to lose money. He furthered that this will also have a negative impact on crypto markets and risk markets, such as stocks, since it is part of the plan. James Bianco believes that the central bank does not wish for cryptos to crash. Rather, it wishes for it to slow down. So, is the U.S. central bank actually going against cryptos? And what about the impacts of this policy from the Fed? Well, if you want to know more, stay tuned until the end of the video because we're yet to talk about it. And while you're at it, don't forget to click on that like and subscribe button for more videos like these. Now, moving forward, what we are seeing is that the Federal Reserve is going against Cardano and other cryptos. Their hawkish economic policies are not looking too good for cryptos at the moment. Another major issue for cryptos like Cardano is that as more mainstream institutional money enters crypto, their connection to regular financial markets strengthens. This results in a stronger association between cryptos and the stock market than previously existed. In this regard, James Bianco believes that institutional adoption is a fundamental issue. He said that cryptos like Cardano would struggle because the Fed will rely on traditional financial markets to combat inflation, and all of these institutions will very certainly sell it, just as they will almost certainly sell their stocks if that prognosis is accurate. So, it is now clear that the Fed is going to come up with more rate hikes, and apparently, this is not good for Cardano. But the thing no one is talking about is that things may not happen what everyone is anticipating. As I said before, Cardano and other cryptos reacted very positively to the recent rate hike from the Fed. If they can avoid a sell-off this time, we can expect them to counter it in the future as well. It is more likely because analysts and market leaders are saying that even if the central bank hike rates in the future, inflation is going to rise and cryptos are still going to grow. In fact, Jerome Powell's recent words drew condemnation from a number of experts and economists. For example, Sven Henrich of Northman Trader described the central bank chairs as performance art. He said that if Powell believed in the urgency of all that he said recently, he should have raised rates by 50 basis points last week. But he did not do so. Henrich said that they physically compressed their balance sheet to new all-time highs in time for the Fed meeting last week. Along with Henrich, gold enthusiast and economist Peter Schiff weighed in on Powell's most recent comments. He said that if the Fed is truly committed to doing everything it takes to contain inflation and reduce its balance sheet, why did it purchase an additional $46.3 billion in government debt during the week ending March 16? Schiff said that this move had increased the size of the Federal Reserve's balance sheet to a record $8.9 trillion. So, what it means is that while trying to control inflation, the central bank is actually increasing its balance sheet by printing more and more money. As a result, even if Jerome Powell announces more rate hikes in the future, inflation may not be able to get in control. And as Cardano managed to trend positively after the recent rate hike, we may see it doing so in the future as well. Now, as I said, investors already consider Cardano as a deflationary currency. But the good news is that we recently discovered that Cardano's developers are now working on a burn mechanism for it. This means that the circulation supply of Cardano is going to reduce drastically in the future, and it is going to make it more deflationary in nature. All in all, nothing bad is going to happen to Cardano, and we are going to see a lot of investors coming to it along with steady growth in its value. In any case, what are your thoughts on this? Tell me in the comment section. And if you guys like this video, then be sure to give this video a like. And also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video. And don't forget about our giveaway. How many coins did you find? Drop your answer down below and you could very well be the proud owner of a brand new MacBook Air. And remember, the information provided is not trading advice. We strongly recommend independent research and/or consultation with a qualified professional before making any investment decisions. Thank you for watching and stay strong.